Hi guys, welcome to Moneycontrol. I'm Karunya Rao. With me is Manisha Gupta, and we typically get you a commodity update at 1 p.m. every day. But today we'll take you down Mint Street and we'll tell you what's happening with the rupee, which has fallen almost 8% versus the US dollar this year. So, of course, we've been getting the updates on why it has happened and the various factors responsible. But talk to us about how it impacts us because, yes, the most obvious reason, obvious things that we see is travel, foreign exchange, etc. But in what other ways are we getting impacted?
I'll start directly with the crude oil first because 80% of our requirement is what we import, and you're paying by the dollar for it. So even as the crude oil prices is trading around $100 a barrel, which is on the higher side if you look at it on an year-on-year basis, and then you are paying top money for that.
Now we don't know 100 is higher side or lower side.
Yeah,
but sure.
well, that's another debate. But the fact that every transportation, the way you move, the fuel, the aviation cost,
Yeah.
the flight cost, we have seen that also transpire on the higher side. So everything that you do from the grassroots to flying, there is crude there and it is being imported and you're paying top dollar on that. So, well, yes, that is one thing that you're looking at, inflation. And even as the global commodity prices have come off, we haven't seen that happen with crude. And if you're importing so much of stuff, and we already have seen that the exports kind of have gone down because there are recessionary fears into the market, but the imports have continued pretty much on the higher side because we haven't seen demand destruction in India for a lot of products. So yeah, that is one major thing that you have to take a look at.
And what else gets expensive? Will we be paying significantly more money to buy even FMCG goods or apparel, gadgets, etc. that are imported?
Absolutely. Well, yes, we import a huge amount of fertilizer, so that is where your agriculture comes into space as well. Edible oil, 55% of our requirement is what we are importing. So even as the international edible oil prices have declined, with the rupee depreciating by 7.5 to 8% in this year, that's much higher that you are paying into the markets right now. And yes, as you mentioned, mobile phones, much of that is imported.
And we have
as
the
well.
Apple launch in a couple of months.
Oh, well,
God.
then.
How much more expensive will it get?
Pretty, as you said, mobile phones, gadgets, spare parts, you name it, and there's a lot of import happening into a country. That's exactly what you call globalization, doesn't it? And the way the currencies have been declining, the rupee almost nudging to that 80 mark, with the experts telling us that 81 is not too far away, and with the dollar index still holding above 109, most of the economists and money watchers have told us that while they expected the rupee to decline up to 79 and 80, they did not see dollar index going up to the levels it has been. 104, 105 was tops for many people, but it's holding at 109, and we're hearing in around 11 and 12 right now. So if that is what we're looking at, if we're looking at higher interest rates just about continuing, then we are looking at rupee on the higher side, and the pain could just about continue, at least for the very near term.
Times like these, you feel like maybe vocal for local would have been a good idea. And, if our dependency was higher on buying more domestic brands and domestic services. Your daughter is going to study abroad.
Well, yes,
so aren't you glad that you logged everything before, the rupee weakened so much?
Well, yes, most of that I did, but you can't just pay all of that.
Yeah.
There is that pain coming in as well, and with the kind of depreciation that we've seen coming for the Indian rupee, and the new semester starts in the month of September, and you have so many foreign students, as in Indian students, going out to study in UK and Singapore and Canada and US and various other, Australia for that matter. And yes, we will be paying higher for that as well. With the kind of depreciation that we've seen in case of the rupee, foreign education is one part of it. Foreign travel is another part of it. People who want to go out right now, they would be buying whatever
extra.
currency, they would be paying extra for that.
I can see your pain actually,
Yeah,
and I'm
you
sure our
can,
viewers
right?
can
Yes,
too.
yeah.
But what is the way forward? Are people who are tracking, the currency, are they saying something that 80 against the dollar is something that we have been talking about for some time now? Once that happens, and if that sustainably, if that sustains, what are we? What should we be ready for? What will RBI do in that scenario?
So, every 5% or a 7% cut that we've seen in the Indian rupee does impact a lot of companies because let's look at it from the corporate point of view as well. A lot of import, a paint company for that matter, you've seen a crude impact on that as well, the rupee impact on that as well. And that pretty much has been the case for various companies. We do understand that 60 to 65% of companies within the stock markets are in some way commodity related. So there is an import cost to them as well, and the rupee calculation is of course a big part of this. So corporates for that matter, and most of the companies also do dollar buying offshore, onshore. So with the kind of rates that are moving and the rupee depreciation that you are seeing, it is a pain point for them as well. There are a lot of remittances that are happening from the Indian markets. There's a concern there as well. Well, yes, if you're a company outside and you're remitting within Indian rupee, that's a great thing.
Yeah.
Yeah, but otherwise there is a pain at every level that you see in the Indian market right now.
So are people expecting RBI to push the pedal and intervene further to sort this out?
So RBI has been doing it directly. We've seen forex reserves come down because of that, and then RBI has been making a lot of policy measures as well. So directly and indirectly, we've seen RBI intervene into the markets. Direct intervention clearly hasn't had too much of an impact because it's a global phenomena. Indirect intervention, well, that impact will be seen 1 month down the road. So we still are awaiting that. And this pain point, most people will tell you, is a very near-term thing. Once you see interest rate hikes go out, 27 July, post that, markets say life will be very different because you would have seen much of that impact already into the market. It is getting factored in. So yes, a couple of months, the pain would just about continue. Expectation being that the last quarter of this year or the first quarter of 2023 is where we will see markets settle down much more.
So any reversal expected post 27 July or in the next 1-2 quarters, or is 80 now will become the norm?
I think it's becoming a pivot point right now is what most markets are anticipating, but will it go way beyond 81 is something that I haven't heard or seen in various reports as well.
And let's hope we don't.
Oh yes.
Okay, so 80 will be a pivotal level to watch out for. Okay guys, that's all we have then in today's update. Thank you so much for tuning in. Have a great weekend.